Hi, I am Joo An, the lead portfolio manager of the Mirae Asset Asia Great Consumer Equity Fund and has been managing the fund since its inception. The Mirae Asset Asia Great Consumer Equity Fund is a high-conviction strategy focusing on the Asian consumption growth story. Even after a successful 11-year track record, we still believe that consumption growth remains one of the most important trends in Asia over the coming decades. We have already witnessed Asia become the largest consumer group globally. However, it is still in the early stages of a long-term growth path. Among the world's largest consumer markets, Asian countries are expected to see the biggest growth of its consumer class within the next decade, especially in India, China, and ASEAN countries. Considering its huge population, younger demographics, low penetration, and higher and steadier income growth, as well as other technological drivers, the Asia Great Consumer Equity Fund invests in the beneficiaries of this multi-decade megatrend. We see powerful structural opportunities as Asian countries shift towards higher rates of urbanization. This shift creates higher paying jobs and increases discretionary income, which should lead to higher standard of living and a shift in spending patterns towards healthcare, autos, travel, luxury goods, housing, and much more. Many of these goods and services are still underpenetrated across Asia, and thus it provides significant headroom for growth over the long term. Our approach to this consumption thematic strategy goes beyond the two traditional consumer sectors. So based on our bottom-up research, we invest across various sectors including healthcare, financials, industrials, communication services, etc., as well as consumer sectors, where we find the companies that are direct beneficiaries of the Asian consumption growth trend. The fund is a benchmark agnostic and high conviction portfolio with about 30 to 40 high quality companies that we believe are run by capable management who can deliver strong business results for the next several years. In terms of our investment philosophy, we run a concentrated portfolio based on multiple drivers of growth, sustainable competitive advantages, aligned management teams, clear catalysts to drive earnings revisions, reasonable valuations, and positive ESG factors. These criteria are inherent to our investment process, which follows a structured and repeatable four-step approach. The first step is a quantitative screen which narrows down the listed companies to roughly 2,600 stocks for investment universe. This screen is based on liquidity risk, financial risk, and business risk parameters. The second step involves analysts conducting fundamental research and building their own sector-based recommendation list. An ESG scorecard is also used to help determine a company's long-term investment potential. Our own ESG scorecard is tailored to cover 24 industry groups and is composed of topics that fall under each of the three pillars: environmental, social, and governance. The third step requires the team to collaboratively create a broad portfolio based on the highest conviction ideas from the analyst recommendation lists. The final step is the actual portfolio construction. Here, the portfolio manager, with input of risk guidelines and the mod portfolio, will build a high conviction portfolio based on bottom-up analysis and structural themes. With our successful experience in managing this strategy over the last decade, we are confident that consumption growth will continue to be a driving force for Asian economies in the years to come, and are excited for the opportunities that this presents for our fund. Thank you very much for watching.